Hey everyone, welcome back to the channel. Today I'm diving into something that's reshaping global politics as we speak, and honestly, it's something that doesn't get nearly enough attention in mainstream media. We're talking about the intensifying strategic battle between the United States and China. And this time, the battlefield is right in America's traditional backyard, Latin America and the Caribbean. Now, before we get into the details, I want you to understand just how significant this shift is. For over a century, under what's known as the Monroe Doctrine and its various iterations, the United States has essentially viewed Latin America as its exclusive sphere of influence. American presidents, regardless of party, have historically treated the region as strategically off-limits to rival powers. But that era is rapidly coming to an end, and what we're witnessing right now is nothing short of a fundamental realignment of global power dynamics. So what exactly is happening? Let me break this down for you because the implications are massive, not just for Latin America, but for the entire global order. First, let's talk about the core reality. Latin America is no longer America's exclusive backyard. The U.S. administration has been increasingly vocal about warning Latin American countries not to cede strategic space to rival powers. And when they say rival powers, they're not being subtle. They mean China. This rhetoric has intensified dramatically, especially following recent diplomatic interventions and the ongoing situation with Venezuela. American officials are essentially telling these countries, you need to choose a side. But here's the thing that makes this so complicated. While the United States is issuing warnings and trying to maintain its traditional influence, China isn't sitting idle. In fact, China has been systematically and strategically expanding its presence across Latin America for years now, and they're doing it in a way that's proving extremely attractive to many governments in the region. Let me give you some concrete numbers to illustrate just how serious China's commitment is. China has established something called the Sino-Latin American Production Capacity Cooperation Investment Fund. This fund initially had around $10 billion dedicated specifically to industrial and infrastructure projects across Latin America. $10 billion. That's not a symbolic gesture. That's a serious long-term investment in building influence and partnerships. But it doesn't stop there. China has also been working through multilateral forums like China-CELAC. For those unfamiliar, CELAC stands for the Community of Latin American and Caribbean States. Through this forum, Chinese leaders sit down with leaders from across Latin America and the Caribbean to negotiate development projects, infrastructure deals, and economic cooperation agreements. And here's what makes this particularly significant. These agreements are being structured to operate outside traditional Western financial institutions. We're talking about deals that bypass the International Monetary Fund, the World Bank, and the entire dollar-based financial system that has dominated global trade for decades. Think about what China is offering these countries. They're providing financing for roads, railways, ports, energy infrastructure, technological development, and industrial capacity building. These are exactly the kinds of projects that Latin American countries desperately need for development, but have historically struggled to finance through traditional Western channels, which often come with strict conditions, austerity requirements, and lengthy approval processes. Now, let's talk about how China is framing this engagement, because the messaging is just as important as the money. When Chinese officials announce these cooperation initiatives, they consistently emphasize three key principles: mutual benefit, non-interference, and joint development. This is carefully crafted language, and it resonates powerfully in Latin America. Why? Because it contrasts sharply with how many Latin Americans perceive their historical relationship with the United States. For decades, U.S. engagement in the region has often come with strings attached. Military cooperation agreements, political conditions, economic policy prescriptions, support for specific political factions. The history of U.S. intervention in Latin America from Guatemala to Chile to Nicaragua, casts a long shadow. So when China shows up offering billions in financing while explicitly promising no political interference, no military bases, no regime change operations, that's an attractive proposition. And I want to be clear here, I'm not making a moral judgment about which approach is better. I'm simply explaining why China's pitch is resonating with many governments in the region. From their perspective, China is offering what looks like a better deal, significant investment without the political baggage. This brings us to the impossible position that many Latin American countries now find themselves in. They're caught between two superpowers, each offering different things and demanding different levels of alignment. On one side, you have the United States, which still represents the world's largest economy, controls access to major markets, provides security cooperation, and has deep historical, cultural, and economic ties throughout the region. The U.S. dollar remains the global reserve currency, and American companies are major investors and trading partners. On the other side, you have China, which has become the world's manufacturing powerhouse and has an insatiable appetite for the exact commodities that Latin America produces in abundance: soybeans, copper, lithium, oil, iron ore. China offers quick financing with fewer political conditions, and they're willing to fund infrastructure projects that Western institutions have deemed too risky or unprofitable. So what are these countries doing? Most of them are trying to play both sides. They are maintaining their traditional security relationships with the United States, while simultaneously expanding economic ties with China. Countries like Brazil, Argentina, Chile, and Peru have all deepened their trade relationships with China while keeping their diplomatic and military connections with Washington. They're essentially trying to maximize their benefits from both powers without fully committing to either. But this balancing act is becoming increasingly difficult to maintain. As the strategic competition intensifies, both the United States and China are pushing these countries to make clearer choices. The U.S. is framing Chinese investment as a potential security threat, warning about debt traps, surveillance technology, and strategic vulnerabilities. China, meanwhile, is positioning itself as a reliable partner for development without political interference, subtly criticizing what it portrays as American hegemonic behavior. What we're witnessing is the transformation of Latin American countries from peripheral players in global politics into what analysts call swing nations. These are countries whose alignment could genuinely influence the outcome of great power competition, and that gives them a kind of leverage they haven't had in generations. But it also exposes them to enormous pressure from both sides. Welcome back to Part 2. Now that we understand what's happening, let's talk about what it all means. What are the real-world impacts of this strategic competition? And where is this heading? Because the implications extend far beyond Latin America itself. What happens in this region over the next few years could fundamentally reshape the global balance of power. Let's start with the most immediate economic impacts. For Latin American countries themselves, this competition represents both enormous opportunity and significant risk. On the opportunity side, having two superpowers competing for influence means more options, more investment, potentially better terms on deals, and greater diplomatic flexibility. When you're the prize that two great powers are competing for, you have negotiating leverage you wouldn't otherwise possess. We're already seeing this play out in practice. Countries can negotiate better terms with China by pointing to American alternatives, and vice versa. They can secure infrastructure financing from China that might not have been available from Western sources. They can maintain access to American markets and technology while expanding their commodity exports to China. In theory, this competition should lead to better outcomes for Latin American nations than they would get in a world dominated by a single hegemon. But here's where the risks come in, and they're substantial. First, there's the danger of overextension and unsustainable debt. While China often provides financing more quickly and with fewer upfront political conditions than Western institutions, these aren't gifts. They're loans that need to be repaid, often with interest rates that aren't always favorable. We've seen cases in other regions, particularly in Africa and South Asia, where countries have struggled to repay Chinese infrastructure loans, leading to concerns about debt sustainability and strategic assets falling under Chinese control. The case of Sri Lanka's Hambantota port is often cited as a cautionary tale. Sri Lanka borrowed heavily from China to build a port that ultimately couldn't generate enough revenue to service the debt, eventually leading to a 99-year lease agreement that gave China operational control. Whether this represents a deliberate debt trap strategy by China or simply poor project planning is debated, but the outcome raises legitimate concerns that Latin American countries need to consider. Second, there's the risk of becoming too economically dependent on China. Several Latin American economies have become heavily reliant on Chinese demand for their commodity exports. When China's economy slows down or when Chinese policy shifts, these countries feel immediate economic pain. We saw this during China's economic slowdown in recent years, which hit commodity exporters across Latin America hard. Overdependence on any single trading partner creates vulnerability, regardless of which country that partner is. Third, and this is crucial, there are genuine security and technology concerns that can't be dismissed simply as American propaganda. When Chinese companies build telecommunications infrastructure, when they provide surveillance technology to governments, when they establish a presence in strategic ports and infrastructure, these do create potential vulnerabilities. I'm not saying every Chinese investment is a Trojan horse, but in an era of great power competition, strategic infrastructure absolutely matters. The U.S. has similar concerns when American companies control critical infrastructure in other countries. By the way, this isn't unique to China. Now let's zoom out and look at the broader geopolitical implications, because this competition in Latin America is really a microcosm of a much larger global struggle. What we are witnessing is the most significant challenge to American global dominance since the end of the Cold War. For the first time in decades, the United States faces a peer competitor that has both the economic resources and the strategic ambition to build an alternative international order. China isn't just competing for influence in Latin America. They're doing the same thing in Africa, Southeast Asia, Central Asia, and increasingly in parts of Europe and the Middle East. The Belt and Road Initiative, which China launched over a decade ago, is fundamentally about creating economic connections, political relationships, and strategic dependencies that provide China with global influence independent of American-dominated institutions. Latin America is particularly significant in this context because of its proximity to the United States and its historical position within the American sphere of influence. If China can successfully establish deep economic and political relationships in Latin America, it demonstrates that even in regions traditionally considered core American interests, the U.S. can no longer maintain exclusive influence. That's a powerful signal to the rest of the world about the changing nature of global power. For the United States, the challenge is complicated by the fact that American policy toward Latin America has been inconsistent and often counterproductive over recent decades. While China was systematically building trade relationships and investing in infrastructure, American attention to the region was sporadic at best. Major U.S. initiatives like Plan Colombia or the Alliance for Progress had mixed results, and American economic engagement often couldn't compete with China's massive infrastructure investments. The U.S. response now seems to be focusing on security concerns, warnings about Chinese intentions, and appeals to democratic values and human rights. But here's the problem with that approach. If you're a Latin American government looking to build a new port or railway, warnings about hypothetical future Chinese influence don't build infrastructure. Money builds infrastructure, and China is offering money while the U.S. is often offering warnings. That said, the United States does have significant advantages it can leverage. American markets are still enormously important for Latin American exports. American technology, particularly in sectors like software, aerospace, and advanced manufacturing, remains world-leading. The U.S. dollar's role as the global reserve currency gives America unique financial leverage, and cultural and historical ties between the U.S. and Latin America run deep, with enormous diaspora communities creating lasting connections. The question is whether American policymakers can translate these advantages into a coherent strategy that offers Latin American countries a compelling alternative to Chinese engagement. Some analysts argue that the U.S. needs to stop thinking in terms of exclusive spheres of influence and instead focus on being a better partner, offering better terms, more respectful engagement, and fewer political conditions. Looking ahead, I see several possible scenarios for how this plays out. In the best-case scenario, this competition actually benefits Latin America by giving countries genuine choices, spurring both powers to offer better terms and more respectful engagement. Countries successfully balance relationships with both powers, maximizing economic benefits while maintaining strategic autonomy. In a more pessimistic scenario, the region becomes increasingly polarized, with some countries aligning firmly with the U.S. and others with China, creating new Cold War dynamics that force difficult choices and potentially destabilize the region. We could see increased proxy conflicts, economic coercion from both sides, and countries suffering economically and politically from being caught in the middle. There is also a middle scenario where most countries continue trying to balance between both powers, accepting investments and engagement from both, while avoiding full alignment with either. This might be the most likely outcome in the near term, but it will require skillful diplomacy and could become increasingly difficult to maintain as strategic competition intensifies. What's absolutely certain is that Latin America will be a key arena for U.S.-China competition for years to come. The decisions that Latin American leaders make about infrastructure partnerships, trade agreements, technology suppliers, and diplomatic alignment will have consequences that extend far beyond the region. And for those of us watching global politics, this is one of the most important stories to follow, even if it doesn't always make headlines. So that's the situation as it stands right now. The great game is being played in Latin America, and the outcome is far from certain. Thanks for watching, and let me know in the comments what you think. Are Latin American countries smart to engage with China, or are they making a strategic mistake? Can they successfully balance both powers, or will they eventually be forced to choose? I'd love to hear your perspectives.